Hello everyone, hope you're all doing well and have had a good start to your week. What I wanted to do today was go through today's price delivery, or section of today's price delivery in a bit more detail, kind of following on from my Instagram story from earlier. And I kind of want to show you how we build narrative, which Burton has done very, very nicely in his markup. So you'll get some text narrative along with this as well. But how we build narrative and how that narrative turns into confidence, confidence on direction, confidence on your ability, and really shows where the skill comes together. So what I have on the screen now are just some pointers for me to remember to talk about, because I tend to waffle on sometimes. So just trying to keep myself kind of in check and make sure I get across all the key points that I kind of want to address in this price delivery. So let me just quickly say as well, I do have some music playing in my headphones, so apologies if you can hear it or hear a beat every now and then. So let's start. So we can quite clearly see that price has ran higher here for, whatever reason we have down here. But what I want to focus on here is this initial push up and then what it becomes. So what we'll start with is simple ideal price delivery. What we would expect to see after seeing a form of price delivery. So I hope that doesn't sound I'm not talking about anything special here. I'm just talking about what we have already seen in the markets already. So for example, here we have price push higher into higher prices, and then we see price be contained within this range, and that's what we see happen here. Price then leaves this range for higher prices. So let's just quickly talk about what kind of the ideas behind this move that we're thinking about, what these BFI banks and financial institutions are kind of doing in these areas. So I just wanted to give a bit more of a story or a logical kind of process that you guys can start to build for yourselves. Now, this doesn't have to be 100% accurate, and I don't know it to be, but what it is and how we're thinking about this is we want to make it into some sort of an understanding, something that we can theorize and think about consistently to then refine and grow our accuracy. So one thing that we kind of picked up on was BFIs and BFI activity, and there was different people talking about it within the industry. When we came across this information, it gave us that kind of narrative on how, to essentially understand how price moves within the market, and that's kind of how we got to this kind of talk of price delivery. But let's continue. So we're contained within this range, this high, this low and this high over here. So what I've put here is that range, so contained price delivery, which obviously I've just covered. And for me, this is BFI activity, right? That means that BFI are, we're seeing a representation of BFI activity in the markets via this range and price being contained between these 2 points. For me, what this says to me is that between a contained price, BFIs are adding high volume orders into the market, and they're attempting to do this quite discreetly within a range. So then what I would expect to see at some point is the high or low be taken, and depending how it's taken will give me an idea on the next phase the initiation, so the breakout of this range, will give me some sort of idea on, well, it will give me the understanding that the orders the BFIs were putting together within this range were long orders, right? Because we have that initiation and that breakout or that push for higher prices after this range. So what I've said here is BFI intentions for higher prices. So we now know that the volume added within this range were long orders, right? And that's what we're seeing here. So then, so we got into range, we got into the initiation, and now we understand that from a smart money concept perspective that they will now want to mitigate out of, right, any sort of losses that were obtained within this price delivery, right? And this is where we will look for, you know, the last buy to sell, sell to buy, the OB, the range, you know, essentially that point of interest that we're looking to possibly get involved in. And then after that mitigation, we would expect to see a continuation, right? So cause built and then price to continue in that original intention direction that we're seeing here. So what I've said here is BFI calls, BFI build cause to initiate more high volume orders via mitigation. So at this point, they're looking to essentially, you know, mitigate out the losses and add more volume into the market. So adding on to their positions essentially. Via mitigation at the previous high volume activity point. So this is where obviously they participated, and this is where they're looking to obviously participate again. And this is where again we now understand that this is a place of, you know, highly likely place of a reaction. We see the price come back into this range, right, into 50% down here, and give a reaction. Now we move above these highs here, but we stop just here, and then price moves lower, and that's kind of what I want to talk about now. So, you know, ideal price action, typically we'll be looking for a range, initiation out the range, a mitigation back into the range, and then obviously cause built for higher prices. And there is, just remembering, I have got one thing. So yeah, that's ideal price delivery. I hope that makes sense. Next, we're going to move on to what I have highlighted here, but quickly, just because I forgot to mention this. This is a range, right? And we can clearly see prices contained between these two highs. Now, if price was to look like this, right, we can also say that we have defined ranges at these points, right? But what we can see that price doesn't stay contained, price actually just continues, right? And then you have this variation, which is where we see price stays contained within a range, right? Now, the difference between these two different pieces of price delivery is time, essentially, right? So, you know, price spent less time in this range and spent more time in this range. And so from this understanding, we can see that over the duration of time that we have within this range, that it continued for a period of time, right? And this could have continued for longer, it could have been for shorter, but we see that it started here and price was no longer contained, excuse me, price was no longer contained, and we have price move away. Now, I would personally call this a higher time frame range. What I'm saying here to myself is that on a higher time frame, right, So if this is a 1 minute, on a 2 minute, 5 minute, 10 minute, 15 minute, right, depending on how long this duration is, right, in terms of where we would be able to see this, that price spent that amount of time contained within between two price levels. Now, time is important because what it shows us is activity and how and what that activity was over that period of time, right? This is where we take our price charts and price and time and put them together. And what we can see here is that when BFIs are containing price for long durations, right, these build essentially, uh, uh, you know, I don't know. I'm trying to think of the right word, but these build, solid areas within the market, if that's a way of saying it. But this is essentially like a block in the market that, or a zone or a point of interest in a market that is likely to see a reaction because of the duration of time was spent in between these two price levels, is showcasing that there was a longer amount of activity. And if there's a longer amount of activity, we can assume that the orders within this range are going to be larger than what would be within this range. Now, I hope that made sense and wasn't too technical, but all I'm just trying to show you here is that we can clearly see from a 1 minute that this is a higher time frame range. And obviously we know that higher time frames hold more weight, and the reason why higher time frames hold more weight is because things happen over a longer duration, which allows essentially, higher volume to be in the market at that point. So when price moves away and comes back into that area, right, that duration of time is showcasing, the significance of the activity for price to move away. Now, if that didn't make sense, guys, I'm super sorry. But again, all I'm trying to show here is just how we can read a range over, how we can understand the range over a period of time. So yeah, so obviously what we see happen is price moves into that range and gives a reaction. And that's what we're going to talk about now. So what we'd expect when price has reacted along the lines of something that looks like this is, of course, higher prices, right? Here's our ideal price delivery. We have range, initiation, cause built, right? For the mitigation, price mitigates, and we get that continuation. So what I have here is here we'd expect to see higher prices following structure and momentum, but, right? And there's a big but here. So a lot of people might have been on the wrong side of the market here due to not understanding what we call as the full picture, right? And the full picture is understanding, what's happening above your price point and below your price point, right? Not just above, not just below, but essentially everywhere. As much as that may sound overwhelming, we only need to know what is most recent to us. So if price is here and there's a higher time frame point over here, then I want to be aware of this. But when price was down here, maybe I didn't need to know about this point. So this is why we want to check our time frames. Over time, you will build the skill to remember these points in the market. But of course, while you're building that skill, you want to show yourself what's there, so you're never surprised. So what we see here is that price does go on to react at a higher time frame point of interest, right? Essentially, this higher time frame mitigation is essentially what it is. So if you go to a higher time frame, you'll see this ideal price delivery. So this higher time frame mitigation that has taken this long to mitigate, essentially, is cause for lower prices. So if this happened at any other point, any other point than this higher time frame point of interest, i.e. here, right? We know that this type of momentum shift doesn't hold any significance because we are not at a higher time frame point of interest, right? Of course, you may see this at the time, you may see this afterwards, you may see this before, but that's fine. The goal here is just to understand, right, and learn. So we can see that price moves higher into this higher time frame point of mitigation, and then we get that reaction and that move away. Now, what's happened here, right, this 1 minute momentum shift at a higher time frame point of interest is essentially our cause for lower prices. Seeing this type of price delivery, especially this reaction, is confidence, right? It's giving me confidence to understand, what intention price has from this point. Let's quickly check. I haven't yet. Cause for that's what I'm on now. So yeah, higher time frame causing being the cause for lower prices. So when I'm seeing this and understanding this, I understand now that these points here are essentially just for just act as liquidity, right? These essentially are in my eyes going to be taken. What I've noticed over time, in my time, in our time, and my time in the markets through discussion and through observation, that at these points, right, the big clue here when we get these reactions at these higher time frame points is that it will aim to take out a swing low. Now, we could call this a swing low, we could call this a higher time frame swing low, or this could be a swing low. But the point here is that it's looking to take out a higher time frame swing low. So we'd expect it to go further than here, right? And that's what we see price do. But we can look to see what it takes later on. But yeah, so when we understand that this cause here can create lower prices, we know that we don't want to get in the way of this momentum shift that's happened, because these longs, essentially you're just taking pullbacks. So you notice here that we get the reaction, but we get no follow through. Now you may be looking at this as your swing high, right? So we expect to see continuation, but you would be incorrect, right? Our swing point is, if anything, is up here, right? One of these, essentially, all of these is one of these. If one of these get run, they're most likely all will, because they're so close together. But the point here is that we see price move up, move down, and move up. So this is where I'll be counting my swing point. And notice, right, we have mitigation from these order blocks and price moving lower. And we see that this pullback is just to mitigate in the direction of the momentum shift, bearish, right? Bearish shift. Now we have bearish order flow, and what do we see coming to the market? We see highs being protected, right? And the market moving to create lower prices. And what is it doing? It's building cause each time. Building cause, right? As in stacking highs and lows together in order to build cause to run prices in the bearish direction. So, when you're seeing this, understand that now you can have confidence in where you're picking your trades now. Yes, you might be on the wrong side. Over time you will learn that, it's when you understand the full picture and you have that full narrative, you won't be on the wrong side no more. So that's fine. We'll forget about that. It's just a skill that is developed with time. And now we see that we can gain confidence in knowing the direction of price to take trades. So I hope that's clear. So yeah, so we have a reaction, no follow through. So what do we know that this low becomes, right? These areas become, this now becomes a weak low because we don't reach, becomes a weak low because we don't break any swing point, right? So look how price moves up into discount, or sorry, premium, back into this range, right? Very similar price action that we saw yesterday, as you all probably know already. And then we get that mitigation and then that continuation of lower prices. So I hope that's clear. And one thing, yeah, so we have this zone that has failed to have a reaction, right? So sorry, we've had a reaction, but it's failed to follow through to higher prices. Now, what does this become, right? Well, this becomes cause. This becomes cause for, to support lower prices. Why? Well, understand, if this, right, was BFI activity here to initiate higher prices, then we should see a continuation of that direction. But what happens is price moves into there, moves away, and then obviously completely wipes out this zone. Quite simply, what we can see is, we've had relatively, well, we do have equal lows. Someone might look at that. Someone could look at this type of liquidity stack there that says, this is cause for lower prices. But what this becomes for me essentially is that this BFI activity that was here and this move into that activity and that move away is essentially them soaking up or taking on more volume, right? So the same type of behavior you would see for a reaction for higher prices is the same type of reaction you would see for them essentially clearing this zone of any liquidity and using that liquidity to, in favor of their direction, their intentions. So I hope that's clear. But what this zone essentially comes is just a liquidity, right? It becomes cause. It becomes, the purpose of this now is to be run. And look how it's run, right? With intention, very, very clear intention to completely take out this zone. And this here, we have a zone wipeout. So what have I said here? Cause, what does it create? Zone wipeout, yeah, so this zone now becomes liquidity, and now the purpose of this liquidity is to be taken, and obviously that's what we go on to see, and then you get the zone wipeout. So sorry guys, I hope that's clear. Then you get the zone wipeout, and then now we know, right? All the liquidity has essentially up in this upper region has been completely cleared in this type of price delivery that we're seeing here, right? This would be a higher time frame high, right? Because we see that fractal nature in price delivery. We have a high, higher high, and then consecutive lower highs, which is essentially creating your fractal high on a higher time frame. This will be a top of a candle. What time does this happen? 10:25. So yeah, that 10 o'clock candle essentially is going to be the high of that 10 o'clock candle. But yes, let's not get too much into that. And then next, we're going to go on to my trade. So the reason why I wanted to go through that in a bit more detail through voice as well, so you can kind of see how we should be thinking versus what you might be thinking, might have thought during this price delivery. But for me, that's what was going through my head. Possible trades was here. I missed this one. Another trade was here. I missed this one, and then the last trade I would have taken was here, and I missed that one. So I trade when I tend to place trades when I'm at the charts. If I'm not by the charts, and obviously I can't take any trades, I'm not gonna sit and watch something if I've got other things to do. So I'm okay with not getting in these trades. When I say I missed them, it's not I wasn't understanding what was happening. Is I didn't see this price delivery be printed for me to take advantage of it. But when I did get to the charts, this is where this is where we get into my trade, and you already have now the narrative that I've built up, and what I understand all of these lower highs to be, right? This is a continuation of that bearish move. So let's get into my trade now, which this is essentially going to be the markup for my trade, but it's going to be quite brief because the bulk of what I wanted to go through was in this price delivery. And again, there's multiple trades in here. I just took this one, right? Obviously Burton caught the one up from here, from up here, but the point is, there's that's our entries. This is our entries, but other people within the members had other trades as well. But the point is here is, when you understand what's going on, then start to get into the execution, then start to get into where would good entries be, because like I said, once you have that narrative, there's multiple good entries. So this is one that I took. So zone was clearly wiped out. For me, this is a strong indication of intention. We've completely taken out this low, which, let's get rid of this, which essentially is your liquidity point. Let's quickly put this in. Is where your liquidity is essentially stacked within underneath this range. So we had the high, a run of, we ran the top of the range, but we didn't run the bottom of the range. So here you see price run the bottom of this range. Now, again, this is where activity was. So why have we not seen that activity be protected? So quite clearly, now we can see the intention of price. So we see price stop next after that move here, right? Perfectly understandable, right? Someone might even be in a trade here based on this price delivery, this OB, this sell to buy, right? And then this liquidity, and they could have been looking at a point to get long here. Now, again, if you're looking at that trade, that's understandable. For me, knowing what's happened up here, in my mind, this is all this liquidity here is essentially going to be taken for the purposes of price taking out that swing low, that higher time frame swing low. So let's look how price delivered. So we understand that we've mitigated above these highs here, and look how price reacts, right? Very aggressively. And let's look closely to what price and how price is delivered, and this is where we're going to get into my trade here. So swing low, right, is essentially ran from this point, right? Essentially gets run, gets taken out cleanly, right? Full aggression. So this is now giving me, and obviously this most recent swing point gets taken out, but obviously at the same time we take up this liquidity. And I just want to focus on how price gets delivered here. So we see that push up, that mitigation, that bounce, right here. So now we know the cause for this price delivery. Notice that what does it create? Right, creates that pause in price, that range type nature. So for me, I'm drawing my inefficiency from this point, because look, after this point we only get sell, 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 and then what do we have here? All right, we have the market push up and then drop again. So again, right, this is where we're seeing that change of delivery, right? We're no longer just selling. There's been some buying right at this low. Regardless of however you look at it, the point here is I'm just trying to differentiate how I'm looking at inefficiency. So this is my inefficiency point now. Now you could draw it from here, you could draw it from here. That's all fine. There's little difference, but you will understand why you draw certain efficiencies in certain ways. I mean, we'll get into it more in the future as well, but not to hold up this trade too much. So a trade you've seen me take before. So the aggression here is giving me confidence, and obviously the narrative. Price comes back into 50% of this inefficient price delivery, right? So for me, obviously, as you guys know, that's my entry, and then to refine my entry, because I don't want a 3 pip stop. What I've seen I can do is put my stops just above 50% of that range, and essentially, what I'm saying here is price is not going to come back up to become fully efficient just yet, right? Definitely will in the future, and I am playing at 50%, and based on my experience, I'm able to refine my stop based on this. So yeah, so obviously that's the entry, guys. Obviously, as you see, price pauses, you know, at a place that is not a surprise, right? Because that's where essentially throughout this whole, you know, price delivery, this was the only range that was created. So of course, you know, price has cause to stop there. Price moves up, builds cause to move into my entry, and obviously then move away, breaking lows, right? Confirming that we are following the right intention because we have breaker structure, and then we get that continuation of price delivery, right? Even as corrective, we see that it does create lower highs and lower lows. So, you know, we can kind of, well, I see that as, you know, that's a clean break for me. But price has built cause to now run higher. So for me, I think this is now a key lesson on why I don't move my stock to break even, right? I've learned through experience, through moving trades to break even and being stopped out, that as long as I have confidence in my narrative, as long as I've gotten a good entry, that I should be able to not even touch my stop loss. This is the weight that I carry with me when I'm analyzing the charts and trying to get my entries down to a point of, you know, refinement where I'm happy. So yeah, a great example here where, you know, I'm leaving my stop open. Right, price runs back into that high. We see that, what does this, you know, move create? High, low. So now we can see that price is now contained within the range. And where does price move back up into? Right, top of the range, obviously creating liquidity for later. Now, only because we have equal highs here doesn't mean price needs to come up and run that now, right? As we know, liquidity is created for future price. So that doesn't necessarily mean that that is the future price we're going to see now. And the confidence here is understanding that we're just following the strong momentum that we're having come in from the higher time frame cause here. So yes, I think that is about it. And obviously we see this trade, yeah, continue to run. You know, obviously, ideally, me personally, I would have wanted to be up in the trade, you know, in these upper areas to catch that full move, but you know, that wasn't the case. But even though I didn't get in where I would preferred, I'm still looking for opportunities to follow the narrative that I've seen come into the market. And again, if you didn't play it here, then you have opportunity to play here, and then, you know, we see that price then goes on to take out that swing low, right? And now then obviously that creates cause now for higher prices, and that's what obviously we see coming to the market, right? And obviously now we're just in a large range. Well, I've just seen this price action, so yeah, it's price delivery, so we're still contained within this range now. So I hope that is clear. Yeah, narrative, trade, my trade. Yeah, so I hope that's clear. Let me know if you've got any questions. A bit more of a freestyle approach in this video, and obviously just myself, Chucks, but I just wanted to kind of you know, add another element into today's price delivery, because obviously, as you guys would have seen, you still got Burton's markups from his trade. Yeah, so I hope take value from this, and have a good rest of the week, guys. Speak soon.